people really need to get away from it's dangerous. It's one of those things that sits alongside tobacco or alcohol. We're not talking about nuclear weapons here. We're talking about zero emissions, long-term sustainable power that can be used in everything that the world needs. Zero emissions is where we're going, right? And that's where nuclear comes in.
You're listening to the Financers Podcast.
1, 2, 3, listen.
All right, welcome to a quick market update. We sort of do these from time to time, and we'll try and keep them a little bit more regular moving forward, especially with some interesting things happening in the world. So joined by Sam Crumpton today, one of our investment specialist advisors from Shaw & Partners. Again, you would have obviously heard from him in the past, and I'm sure he's got plenty to tell us about, so I won't take up too much of the airwaves today. So welcome, Sam, and give us your take on what's happening in the world, what's happening with the US and Iran and the Middle East in general.
Well, a lot is happening, right? So we just got through the sort of SaaS apocalypse, if you like, that sort of shook all the tech stocks, and then we're greeted by some strikes on Iran. So like, I'm not a geopolitical expert, but I read and listen as much as I can, much to the annoyance of my kids whenever they get in the car with me, right? But we have to keep listening, and essentially, as I understand it from what I've read and listened to, Iran is the head of the snake, if you like, for sort of terrorist funding around the world, according to some, right? Depending on whose take you want, but the sort of that seems to be the consensus, and I don't think anyone's, well, judging by the shots of the Iranian people in the streets, they seem to be really happy about this regime change. So obviously, Mr. Trump is saying he's done very well. There's no surprises there, and apparently a lot of the leadership has been taken out. So we hope this is over quickly, as any human would for a war where human lives are at risk. It certainly seems like America's more than got Iran matched for firepower. No surprises there. We're hearing all about the success from America, which is, on the face of it, it's a good thing, right? The regime in Iran has been horrendous for the inhabitants for a long time. There's reports of massacres and all sorts of nasty things going on there for years. So it seems like it's a good thing for regime change there. The question is, if the leadership, if you like, of Iran is taken out, who takes over? I'm hearing reports about certain sort of fringe Iraqi, parties looking to come into Iran, which doesn't sound good. So sounds like America may need boots on the ground, which it extends the whole conflict. And obviously, the objective on the face of it, and again, America and the West has always justified conflicts previously, and sometimes we find that out that isn't justified, and sometimes we do. Let's hope that the end result of all this fighting is it sounds counterintuitive, but we get a quieter world, right? So the one thing that's obviously front and center is oil, right, for Iran. That's obviously they control the Hormuz Straits, if I said that correctly. All sorts of fascinating things going on there, right? So Lloyd's of London apparently paused coverage on tankers there, which that's not helpful, right? Because that stops the flow of oil. I think America stepped in, as far as I can understand, to ensure those shifts, which is good, because we don't want an oil spike. I also understand that the Iranians struck a Qatari LNG plant, which that messes with production, and believe it or not, gives more. That's good for America's energy suppliers, and it could be seen as combined with Venezuela, which was a huge supplier. Like, if this all calms down, fingers and toes and ears and everything crossed, right? Then what if we get a calmer Middle East? Like, I know that's a huge ask, and but like the same approach for the last, ever since I'm the ripe old age of 52, ever since I can remember, there's been conflict in the Middle East, and the question most of us ask is like, why is everyone fighting all the time? Like, don't they get sick of it? Like, can can there be someone that steps in and mediates? Like, surely they can't just have the energy to fight and to just live in that environment for so long. But who knows whether this will change? Let's hope it does. It's a big ask, but peace in the Middle East is, maybe it's mythical, but it certainly would be a nice change. And should they get that, you're going to find energy prices coming down. And I think that's the important, well, obviously apart from the human lives and living in a more peaceful world, wouldn't that be nice if energy prices came down and we got some global relief on inflation, because that's a big part of what we're all paying. And you know, they certainly, I don't think the previous US administration was so keen on pumping the oil out, but the new one is. And a sort of re-embracement of fossil fuels is not saying that we're abandoning climate objectives. Everyone wants a cleaner world, but the realization that windmills and solar panels aren't doing it, and Europe's certainly feeling that their energy prices are through the roof, and it's making everyone uncompetitive. So a realistic switch towards cleaner burning fuels is it makes sense to me. And bringing, with the cost of everything else going up, why not bring energy price down in the near term? The myth that more fossil fuels means that we're polluting the world. Yes, but we're not. No one's reducing consumption here, even though we're using more wind and solar. We're just offshoring all our energy creation to China, which is a bad idea. When I say that, we mean via solar panels and wind, because those guys make most of that stuff. So anyway, I hope, in summary, that this conflict settles that's the objective. That's the sticker shock. You get a nice remove. I don't think you get for democracy in Iran, but some sort of environment where people aren't fleeing for their lives. I mean, I think lots of us have met Iranians moved to Australia or wherever else that have been fleeing an oppressive regime. And what happens if they all want to go home and rebuild Iran, and you've got zillions of people with a productive populace that likes Western values and wants to get on with their lives and grow and prosper? That'd be a nice objective. So I guess that's where I'm hoping that we see. So in terms of portfolios, I don't know if it's too early to trim oil and gas stocks. You'll notice your Woodside positions and your Santon positions are up. It's, the playbook is usually, trim some of this exposure here because oil prices have come down. The US is really keen to bring energy prices down. Mr. Trump, drill baby drill, that's his focus, and there's lots of energy out there. There's no shortage of it. So, wouldn't it be nice if our cost of energy went down significantly? And that does that mean I don't know if I'm ready to sell oil and gas stocks just yet because it's a bit early, but I don't know if I'd be buying them here. I think that they want to keep the Straits of Hormuz open. It doesn't mean that someone with a few rockets can't disrupt something, and it's a bit fragile, to say the least. So
I suppose that's the flip side, is that, and based on what you're saying, is that this has been basically a perpetual conflict, really. Like, it's just gone on forever. And the risk is, if it does escalate or it just hovers, isn't it, that you do end up with that potential increase in the price of oil and gas, which flows through into making everything a bit more expensive and potentially pushing on inflation and things. That's sort of on the other side of it. If it did escalate or just continue for a lot longer than we want it to, that's obviously the other side of it. But I think, as most people would agree, is they want it to be a resolution to come sooner rather than later, and then find this new normal, hopefully a more peaceful one, and then people can get on with the show. Is that sort of fair on the other side of it? That if we did have an escalation and it became a bit more, it wasn't as regionalised and it became more widespread, that would be where sort of some of the flow on risk would be. Is there any other areas or sectors that would get caught up in that as well?
Well, if I could just step back and just sort of cover the whole, so since the new administration, you could either think he's a crazy man that does whatever Donald Trump I'm talking about, or you could take the view that he's strategically planning for this, right? And it depends on which side of the fence. So since they came in, they took out Iran's nuclear capabilities, supposedly with that Fandangle bomb that they had, and then they went to Venezuela. Now, depending on who you listen to, Venezuela was a source of oil and money that was like Iran and China and Russia and all sorts of apparently nefarious countries that don't have America's best interests. Not that I'm like I like America, but like if in terms of the Americans' perspective, like, did they plan on doing this 5 moves ago when they went and took out their nuclear, and then they went to Iran? Sorry, then they went to Venezuela and all the other little conflicts they've been tootling around. They've taken out Hamas and ISIS, and so was this kind of is this the final piece of the puzzle? And if that case, it's like, well, maybe he's quite strategic, but all that stuff, yes, if that ends up if that doesn't work and we end up extended conflict, and higher oil prices are always bad for the economy, because obviously it's a higher cost. But we've been having higher costs for a while now, and I think as long as the flow of oil continues, the market will calm down and price it in. It certainly seems like, but yes, inflation is a concern. Obviously, if inflation comes in globally, then you've got interest rates to talk about as well, which will affect investments temporarily. You're moving from floating rate, a fixed rate notes to floating rate notes in the income market, and it would kill the resources trade, because obviously higher rates, and then does that mean American dollar goes up, and that's a flight to safety? That's always like that. The US dollar is like literally one of the most important indicators. Like it determines the direction for a lot of asset classes, specifically resources, right? And so yes, in long story short, is that if it continues, it's not great for markets.
Yeah, that makes sense. And I suppose in the terms of the market, and I think everyone's sort of trying to work out what happens, and that's probably why we're seeing the market's been off this week, just looking at the Aussie market, but it's also not been drastic either, really, considering we're coming off, markets have been relatively strong in the last 12, 18 months. So everyone's sort of just trying to assess the situation, really, aren't they? And then we'll try and sort of plot our path forward. I don't think anything drastic in terms of swings in or out is where anyone wants to be at the moment. It's just trying to work out what happens, and then also overlay every other sort of event and tailwind or headwind that's in there. And I think maybe just to jump sideways a little bit, we might just touch on sort of the tech and software sort of stuff, and maybe a little bit of an update on any direct stock stories if you want to, but maybe just give us an update on where things are at in that market space. I know there's some of the AI things that have come out in recent times which have created conversation and concern, and probably likely some impacts on some businesses, but maybe just from your view, just a little bit of the AI sort of overview and how that's flowed through to some of the stocks we might be familiar with.
Yeah, so all the stocks we're familiar with, WiseTech, Xero, Block, and Xero, all of them are affected by what's happened in the AI world. So I don't know, a month or so ago, there was an upgrade to an AI platform. I think it was Claude, and essentially, or some Anthropic, I forget which. I've done so much reading, I'm forgetting who. But essentially, there was a breakthrough, which essentially meant that all software potentially was at risk because you could replace it with AI. And essentially, the rate of change with artificial intelligence essentially is so quick that how do you justify multiples on software going forward? And so in English, that means that, for example, if you've got a company with a U-Butte software model that's been going forever, does it get replaced by artificial intelligence or Claude or ChatGPT or whatever plugin they decide to go with? And that's the $1 million question. So the business is more than likely, say take Xero for example. It's they have a moat, if you like, or they have a system of record is a phrase that I picked up from one of the sort of bigger tech investors globally. And essentially that means they've got like a record of people's financial information that's vital for producing a product, right? You can't, have any guessing work from or any hallucinations from ChatGPT. Hallucinations is the phrase that people talk about with AI when it kind of makes stuff up and you correct it and say, hey, what are you talking about? Oh, very sorry. I got that wrong. Let me try again. So, like, you need specific data specific to a human and a tax file number for Xero, for example. But the stock, they made an acquisition just before this AI thing came in. Um, but AI enhances Xero, like it improves the outcomes. Judging on some of the clients that I've spoken to, I'd be really nervous if I was a unqualified bookkeeper, for example, because potentially AI is going to come in and streamline some of that. But whatever multiple Xero trades on, the new updates on artificial intelligence are like, well, it sounds wonderful now, but like, can I replace it completely in the next 2 or 3 years? And we're in that like, oh my God phase. Like I had a few restless nights, like, wow, this is really like amazing what it can do. Like I'm trying to spend an hour a day was what I learned from a guy who was terrifying the pants off me about, job losses and, like just the whole fabric of society is going to change from AI, according to some people. But then the others say, calm down, it's going to be a massive productivity boost. And we're in that bit where we're just trying to find out, right? So what's happening is the market is repricing software companies with lower multiples, basically, right? Because you don't know what they're going to earn in 5 years. You don't know what they're going to earn in 3 years. There are going to be some of these businesses, and we think the 4 that I mentioned before are all going to be okay. But productivity software, for example, toast, right? Like there are certain areas that you don't want to know about. And we've got obviously research from our UBS, which is our provider, and they've all got lofty targets on most of these. Goldman Sachs, we can see everybody's research, and we also get the benefit, as you do, Ben, speaking to fund managers, and we spoke to Hyperion the other day. We like that one. That's had a great track record. We also spoke to Munro Global Growth Fund, and they've obviously got like teams of analysts working on this 24/7, and they've been buying. So Hyperion's been buying 360, and they were waiting to see what the result was to buy or add to WiseTech. I've added a little tiny bit to WiseTech, but not much just yet. I'm just happy to sit. Now, just stock specific on WiseTech, they had a really good result the other day. But the market is waiting. They're not, it's just bought this massive acquisition, which is unfortunate because when you make an acquisition in the software world, and then you get a moment where all of a sudden AI progresses and then it reprices every acquisition you've made. It just everyone's a little bit cautious, right? But I think from consensus that the people does that all make sense about the software?
Yeah, definitely. Again, I think that the key thing and the challenge for people is to try and understand how it works. And I think, again, I know you've done lots of research and we use a lot of AI around that to sort of expose to it. If people don't know what it is, then it can scare them as well, instead of sort of seeing the power and the benefit of it too. So I think, it's still relatively new tech, and people are integrating that into their lives at the moment. So when there's, again, the whole thing I was thinking about that whole time is there's just lots of points of uncertainty, and that's more the killer of share prices than the actual reality. It's just the uncertainty, isn't it? So ultimately, while we have uncertainty around valuations, expectations, performance and those things, well, we're likely to see, probably some stagnant share price or even some pullback on those. Again, there will still be good results amongst it, which will spur them on at times, but everyone's just a little bit guarded. You overlay that with the global conflicts and things, even if it's completely unrelated, there's just sort of a bit of more, people are a little bit more cautious in those times, and human behavior will drive that too. So, there's lots of things against it, but I think, like you said, is going back to the fundamentals, using the research from the UBSs and of the world. And I know, talking to people like Nick Griffin at Munro, like, we've spent some time with him, and, understanding the layers of research and the teams that they've got working on some of these things. It's easy for us maybe to have confidence in those. But trying to keep that simple for people to understand is obviously a challenge as well. But again, we've just got to be, I think, with portfolios, it's simple. It's about having some exposure to these things, but it's not like the whole of portfolios is tech based or is oil based or any of these things. It's still maintaining that diversity, and there'll be some bumps in portions of it, and we've just got to be conscious of that. So I think the tech thing is something that we'll probably continue to talk about, and as that unfolds and we get more clarity, we'll try and provide that for people. Um, is there any other sectors you sort of wanted to touch on? I know maybe one that, from my mind, and is probably around uranium. We've had exposure to uranium, and whether these recent events have had much impact on that, you can confirm. But we've taken some internally with portfolios, taken a bit of profit out of some of the likes of Paladin and maybe next gen. There's a few other exposures and people have got. Maybe just a brief comment on where that's at the cycle and where you sort of just a reminder of why we've been pretty bullish on that sector.
Yes, absolutely. So love the sector still, right? And if I was to basically, try and understand the software thing and AI, and then step back from it, like you would have learned from speaking to Nick Griffin at Munro, they're leaning on the picks and shovels. And just so Nick Griffin from Munro, you guys, quite a few of your clients have got Munro Global Growth Fund, when obviously we speak to them as well. And you don't get more, and sort of the picks and shovels, if you like, is the way they explain, like essentially hardware, like that's the place to invest in. Energy is another place they love, and they go through, I think Constellation is an investment they have, and so that's obviously nuclear energy. So nothing works without electricity. Okay, and then sorry, I just beat my horn accidentally. Sorry. The nothing works without electricity, right? And so the AI doesn't work, the screens don't turn on, the lights don't work, the EVs don't go, right? It is so crucial. And obviously it's zero emissions, nuclear energy, right? And without going down why have they shunned it for so long, who knows, right? Someone's making some really bad decisions, right? And we are just getting warmed up in this nuclear space because the whole trade industry has been held up by people who had the wrong idea, right? Like it's just embarrassing how wrong the grown-ups get it in the world, right? Or whatever reason they were choosing to avoid it, and whatever reason that got sort of cut down, and like, I don't even know why the Labor government doesn't get on board, right? It is zero emissions. It's very abundant. It allows countries to have their own energy independence, which is so vital these days. You don't get, pressured into doing things if you've got your own electricity. You can build an economy around it, and so very much I'm a huge fan. And that's not just me. I mean, literally, America is tripling their nuclear capacity over the next 3 years, right? China has not stopped. China's way ahead of the curve on every country. They've been building nuclear power plants non-stop. They never stopped, even post-Fukushima. They were buying the uranium that Japanese nuclear companies were selling, and now Japan is busy expanding their nuclear capacity. Everybody gets it. You want AI, you want EVs, you want the new age. You need electricity and you need clean burning fuel, and nuclear is amazing for that. The disconnect between like $200 uranium price and where we are now is the utilities who are they're the people that buy the uranium, they enrich it, and so essentially digging something out of the ground, converting it into a little rod, dropping it into a nuclear reactor, come back 10 years later sort of thing. It's still, or 5 years or whatever it is, it's still producing electricity. It drives a turbine, and that turbine creates electricity. Just same deal with a coal-fired power plant, except it's nuclear fission that's doing that, right? So they've been a bit reticent to come back to long-term contracting. What's different now, Ben, is that the data centers, the large companies like Amazon, Microsoft, are going around the utilities and saying, we just want to take all your capacity, right? So give it to us now. They're investing in things called small modular reactors. They're smaller versions of a bigger reactor. They've been operating in subs and aircraft carriers forever, but now we're getting the whole world's focus on it, right? So big dollars from tech is focusing on it. So this is exciting. So the trade hasn't or the investment theme hasn't gone away. We've taken some profit here and there when you're long Paladin at $7 and it goes to $4, and I get some grey hairs, and then now it's back at $15. I'm going to take some off the table because it has ebbs and flows. It does weird things, the uranium space. It seems to go up and down with markets, even though it's got zero to do with what the stock market's doing. The demand is going higher. It's baked in stone, right, that it's going higher, and we need a lot more. But I guess traders get bored and they buy and sell, and then you've got the specific company things that can go wrong, right? And so, I just think now a broader approach to a thematic is interesting. So if I was to do anything on a big run up, it'll be, so next gen today, a lot of your clients have got some next gen. Hallelujah, they got approval to go ahead, and that's an exciting company. That's one of the biggest uranium deposits in the world. When they're in production at around these iron ore uranium prices, they will be a top 5 global mining company, which is kind of amazing if you think about it. Going from 0 to top 5 in the world in terms of revenue from one mine, and that's amazing, right? And they do more for climate change than like a zillion windmills, right? Because essentially you are powering zero emissions fuel for a very long time. If you can be bothered looking at their website, they are the new age in mining, right? They're literally burying all their their waste underground out of the same hole that they're digging it out of. It's brilliant, right? And first time Canada's approved a big mine like this for a while. And what the good thing is about NextGen is that they've already, the Arrow 1 deposit is amazing. They've already finding another one, and Lee is an Adelaide guy, and I went out of my way to say hello to him. He's nice enough. We have lunch from time to time, and their geologists are excited about that. Haven't even scratched the surface. There's more to come, which is kind of mind-boggling. So, that certainly will do well. But overall, I'm very comfortable with the sector. People really need to get away from the, it's dangerous. It's one of those things that sits alongside tobacco or alcohol. That is not, like, we're not talking about nuclear weapons here. We're talking about zero emissions, long-term sustainable power that can be used in everything that the world needs. You can't fill up an EV with coal-fired power plants. Well, you can, but that doesn't make much sense. It defeats the purpose. Like, zero emissions is where we're going, where we want to be, right? And that's where nuclear comes in. So long-term, everyone, I think, should have some exposure to it. Paladin and NextGen have been really good. URNM is another way of doing it. URNM is when we start to get to these bigger valuations that we're getting with Paladin and NextGen, URNM is kind of, it's obviously a portfolio of stocks, so less likely to blow up on, like Paladin's in Africa, NextGen's in Canada. A portfolio approach may be a safer way to go in this crazy world, because I don't know if Trump and Carney don't get on and some weird stuff happens there. I'm hoping that common sense prevails, and obviously Paladin is in Africa. So I think I'm leaning towards maybe a move, like a blend between Paladin and NextGen and URNM. I also came across another ETF called URAN, which is it's a more broader approach to the whole nuclear trade, in terms of not just uranium miners, it's power companies, it's enrichers, and another one called Atom, which is I just feel like a broader approach is sensible at the moment, given that all sorts of crazy things can happen. But make no mistake, the uranium sector, nuclear power sector, is you can't have the AI push without that, right? And so that's an easy one for me. And I get it that some people might be still maybe listening to the Australian government about how they don't like uranium. They're the only ones in the world that don't, right? And they're wrong. So we need to listen a bit more broadly, and essentially, I think this is core for many portfolios. Obviously, it doesn't help with income, and that's the problem. No one's at an income producing stage, but that's kind of, they will get there. But this is the issue, and another reason why the sector's so strong is that it was in the doldrums for a long time, and now we're building mines and getting back to cash flow, and cash flow is required for dividends. So we should get there. I mean, BHP is another exposure that all your clients have, and they should be enjoying all-time highs at the moment. The 45% is copper, and obviously they get uranium offtake from Olympic Dam, and so they should benefit there as well.
It's interesting when you mentioned BHP, and again, we won't go down that rabbit hole of copper because we have talked about it before, but it's one thing I just always mention to clients is that everyone just thinks of it as an iron ore business, but there's obviously there's lots more to it than that, and the copper side of things, and that is just another diversification and another tailwind for them as well.
Oh yeah, so it's no secret. We're told day in day out from our research analysts that BHP is 45% copper. That's attractive to us. I know it was a funny one. You obviously need it for infrastructure spend, and all the analysts, they frequently, analysts obviously tell us, specific commodity analysts gives us a sense of where things are going, and they seem to always get it. They seem to be too bearish on iron ore all the time, as if there's lots of supply coming, and it never seems to. It always seems to stay up there, and BHP very much a copper-focused investment. So Rio's got some as well. I don't think it's quite as high as 45%, but yeah, copper is again, nothing in the AI tech world happens without copper, and that's been our primary exposure. One that I think looks interesting on this pullback, I'll be looking to. I want to add, where possible, so Wire, WIRE, is an exchange-traded fund that basically owns a portfolio of the biggest and best copper miners in the world. And obviously BHP's been a good exposure. We had Sandfire for a while. Sandfire got really expensive, and analysts were telling us to sell. But Wire, I think, is a really interesting opportunity because, again, it's broad approach to copper, and that theme is copper's really hard to find, right? So certain commodities are easy, like coal is one big long blanket. When you find some, it's 1 or 2 or 3 or 4, whatever it is, meters thick, and it behaves. It's the same here and the same 20 meters away and the same 50 meters away. Copper's it's been pushed up through cracks in the earth. You've got to follow it, and I don't know if anyone's had a go at investing in speculative copper stocks, but you go from hero to zero in a very quick succession. So I've never I just hardly touch explorers anymore until they have what they call the discovery hole, and they are few and far between. So client exposures, I love Wire, and that's been across my sort of wider client base, that's been there. BHP's been good, and on the dip, we want to add to it, I think, or include into portfolios for those people who don't want income and happy for more growth. But copper, uranium, similar theme.
Awesome. I'm gonna wrap this up, otherwise we're gonna get booted off this recording. But again, there's always we get lots of questions and feedback, and again, I just encourage anyone listening to keep firing that stuff through. And then again, like I said, we'll try and keep these a bit more regular, especially with things unfolding and if there's any twists and turns that we want to jump on. So again, thanks, Sam, and it's always a pleasure, mate, to hear your info and get some better insights. So appreciate you jumping on, and we'll do it again soon.
Yeah, my pleasure. Anytime anyone wants to have a chat, then let me know. It's lots happening. So, yep.
Busy times.
Stay in touch.
Thanks, mate. Cheers.
We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, follow us on Instagram, Facebook, YouTube, and Twitter at Burke Britton FP, or Google Burke Britton Financial Partners to check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening. Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decisions, listeners should consider the appropriateness of any information with regard to their particular objective, situation, or needs, and seek advice from a licensed professional specific to their circumstances. PB Financial Solutions Proprietary Limited, trading as Burke Britton Financial Partners, are authorised representatives of Acumen Financial Planning, ABN 89051208 327, Australian Financial Services Licence 232706.